So it's really changed in terms of the capital composition in CE. I mean, this time last year, people were looking at South African money still driving much of the retail market, and then domestic capital taking up a big chunk of purchases. What's really changed is the inflow, obviously, of Asian money. You've seen South Koreans be the biggest story, but on the back of that, we've seen money moving in from the Philippines, from Malaysia, from Singapore, and we expect that to continue. Chinese money actually making a bit of a resurgence. It's very different than last time around. We see that the Chinese money is coming in much more under the radar. They're not looking for the trophy assets, they're looking for more your value add plays, logistics, industrial, and we see that as a strong sign. The other interesting factor is if you look at the first half of the year, domestic capital was actually net sellers. So they made up over 40% of the sales, which is very different compared to the last 24 months. That really has come off the back of strong local development, but also we see that the capital is maturing and they're starting to cycle through product. Whereas before they were much more on an acquisition spree, now they're doing both sales and acquiring. So it's exciting because it means that we've got a much more diversified capital base in Central Europe, which is really the goal for us as a group. So yield compression has been a very big topic around how low can it go, and I think for us, 6 months ago I would have said probably not, we were at the peak, but the reality is the market continues to move, and I think that it's driven by just frankly a lack of supply of quality products. So anything that's coming to the market, you're seeing double-digit offers coming in, you're seeing buyers coming in that haven't been active in Central Europe, and it's really pushing the pricing. We think that this is probably going to continue, more so in your kind of core capital market cities where you're looking at Warsaw, you're looking at Prague, Budapest. We're seeing probably a little bit of continued pressure on yields. I think if you're looking at Romania, there's still actually a fair amount of ways to go. We expect that market to go below 7%. So in general, yes, we think that there's still room. How much more is a bit of a question mark, and for how long? I don't know. I think we'll have to find that in 2020, but I do think that you're going to see some yield compression. The last few weeks have definitely seen kind of an upheaval in the co-working space, and I think the recent kind of news and activities as it relates to WeWork have drawn a lot of attention, and I think that investors are looking at this and they're waiting to see what happens with WeWork as a company, and what that means in terms of new locations and expansion and the existing locations that they have. Having said that, I believe that the co-working phenomenon is going to continue, and I don't think that we're going to see any slowdown, particularly in Central Europe, because I think there it was still in its infancy. So there's a lot of providers, in addition to WeWork, that are continue to grow. We still see it as a demand from the occupier standpoint, and I think that's really the key, is that occupiers still want this, and I think that until it gets kind of saturated on that side, you're going to continue to see it as being really the next wave of what happens in office buildings as they're coming through. So it will be interesting to see what happens in 2020. Capital is really, I would say, focusing on core locations. We've seen a lot of investors saying, as it relates to offices and even retail, they want to be in capital cities. They want to have some kind of liquidity to make sure that if the market slows down or plateaus, that they can trade out of assets. And I think that's really where investors are going for. They're willing to pay sharp prices, but they want to know that there's liquidity at the end of the rainbow. So I do think that when you see deals even transacting in the likes of Budapest, Bucharest, etc., that are bringing liquidity to the market, that's drawing more capital. So it is a chicken and the egg situation, but we think that really from an office perspective, it's capital cities, even from shopping centers, it's capital cities. Logistics, it tends to be on major motorways, obviously bordering the German markets, and that's really been the key. So anything along that area, still you're going to see capital flow, and there's going to be an abundance, and more often than not, more capital than what there is product.